Hey, welcome back to Two Spit Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're going to talk about the most recent consumer price index numbers came out. We're going to break them down a little bit, and we're going to show just how crazy the cost of living has gotten. With the one thing at the particular end of this video, I think you're going to be blown away when you see this number. It's wild. You gotta check it out.
Two Stupid Guys Trade Stocks.
All right. So, the great story about Jerome Powell versus inflation has been going on for a while. We made some good progress initially, right? Got CPI was up over 9% at one point. Now it's hanging out down like 4.1%. But, the most recent kind of data point came out, still unfortunately increased to 0.4% month over month. And then, we also saw like actual core CPI be up 0.3, and that's on a 4.1% 12-month basis right now. So it's still tracking at double the rate that the Federal Reserve hopes to get it to. What do you think about that?
Okay, that's very high. I will say, I wish I knew that you're doing this video because it would have been funny to put this in there. I saw two things. I think it was one from Goldman Sachs and one from JPM. I'll have to double check that. One was saying the war on inflation is over. We have won. It's going to go back to normal. The other one is saying we'll never hit those values again. This could last years. But they're both professional analysts making like six figures.
Yep.
It's like completely different.
It's amazing. I love it. This is a little bit kind of telling of like my later kind of point here. Real average hourly earnings fell 0.2% in a month, but we're up 0.5% in the year. Okay, for a year ago. But inflation is kind of outpaced now the actual increase in hourly earnings. So people are starting to lose buying power. Right? You get that? What I'm trying to say there?
Yeah, but how much of that is due to the amount of money we created versus corporate greed?
That I can't say. You'd have to look at like profit margins for businesses across the board in order to be able to have a better estimation of where they're going. We're headed into earnings season again soon, so we'll have an update as far as corporate earnings, and that'll give you an idea of how much of this is going to bottom line profits, right?
That would be a very interesting video. We should do that.
Yeah. So this is the actual graph of consumer price index. We talked about how PCI is better indicator according to the Federal Reserve, but this is still like that one that really gets the headlines. The kind of headline CPI has come down to now 3.7. Core CPI, which is the one that excludes food and energy, is at 4.1%. We have seen some increases in energy costs too, which has been interesting that the core CPI is now higher than the headline CPI, but we'll see how much longer that lasts with increasing energy prices, particularly in the wake of another video we're going to do about the whole crisis in the Middle East a little bit.
Yes.
So this is the actual chart that the BLS puts out in order to look at exactly where all the kind of inflation is occurring. Some of the categories are deeply into the negative. Here you're seeing this actual natural gas was down 20% in the last 12 months, which is pretty crazy. We've had to adjust to the whole war in Europe. Shelter has been the one that's been driving this still higher, right? You're still seeing positive number after positive number after positive number. It's just continuing to be kind of a little thorn in the side at a 7.2% annual rate right now, still for shelter price increases.
Okay. I'm kind of surprised medical care services was negative.
Yeah, it was negative for once. I know our prices should never go down. We both work in medicine, in case you never knew. So the index for shelter makes up 1/3 of CPI weighting, and accelerates 0.6%, 7.2% in the year. More than half the rise in CPI was attributed to shelter, in particular. That's crazy. Yeah, makes you wonder. Yeah, what's up?
So if more than half the rise is due to shelter, how would a housing crisis affect this? Because less and less houses are being bought. It seems like that just happens every month. It's like, less than last month. It just keeps on happening.
So the data point I'm going to show you at the end of this thing that I thought absolutely blew my mind was how unaffordable homes really are for like average family households now.
Okay, jeez.
Yeah. So energy costs, we did see a little bit of a pickup there. Like I said, that right there is only going to unfortunately get a little bit worse as we head into winter in the Northern Hemisphere. And also we have the kind of unrest in the Middle East at the very minimum that will disrupt oil prices, unfortunately. So that one is not going to be aiding inflation for a little period of time. We're going to probably see it as more of a headwind as we get through this. And the 6% increase in food away from home was an interesting one. I did a separate video about how it's garbage that my go-to meal has increased 15% per every year for the last couple of years. Yeah, so 6% undercounts it, particularly on the lower end of the economic spectrum, which is where I enjoy my lunch. What can I say?
I'm telling you, I think I think margins are going to be very good. I think there's some corporate. I think Chipotle is about to raise their price again. It's about to get ridiculous.
I would not be surprised at all. So service sector is still up a positive number here, 5.7% on a 12-month basis. This is another one that's been kind of sticky. We've talked a lot about this, about how service sector is really based upon wages, and wages have been very sticky. We have now have a month of negative real wage growth, but wages are still up significantly from where they were pre-pandemic, right? And then no one cares about cars. That market's going to be its own little world. This is just highlighting the same thing else. What's that?
I just saw RPR and I got confused. Okay.
Yeah.
Sorry.
The shelter making up 40% of the core CPI here. I don't think there was any other major point I wanted to make with this particular slide. Largely contributed to the headline in recent months.
I should clarify that. Just because people are like, why are you confused about RPR? In medicine, an RPR is a test that you check for syphilis. I just didn't know where this was going. Sorry.
Yeah, no syphilis talks. All right, so this is going to show you this is where I'm going to get into this analysis of just how insanely expensive it is right now to buy a home in the U.S. Where that shelter inflation is driven it to this point that is just crazy for a lot of consumers. All right, 30-year mortgage is currently sitting at, it's like 7.66%. Right, that is the average from Mortgage News Daily. That's the most recent one for the actual day, right? So that's as up to date as I can get. All right. This is when you talk about. This is kind of funny. This is, I think, from I forget what it was, a Reuters article, but the average home price, and then they said the median home price. You remember learning statistics?
Yeah, those are not the same at all.
Yeah.
So which one is it?
Yeah, we're the stupid guys, but this is the actual writer out here for a financial publication. The correct is its median home sale price was $430,000. Okay.
Okay, median. Okay.
31% increase from 2020, and it's in this high environment. All right. So next slide. So how rich do you have to be to buy a house right now?
Oh boy.
Right. Okay. So $430K median home price. If you did 3.5% down. You finance $450K, which is like the FHA. That's kind of like the baseline for a first-time home buyer. At the 7.69% APR, it's a $3,000 principal and interest payment a month alone. Okay.
Okay.
The average homeowners in the U.S. is about $230 a month. The average or median U.S. property tax per month is about $224 a month, giving you a $3,400 per month mortgage payment. That's pretty broadly median across the entire U.S.
Okay.
And financial planners say that a mortgage payment or housing cost should never be more than 28% of your gross income.
Okay.
So you're going to move us over to the side. I'm going to click and reveal the number here of how much your gross family or household income must be to afford a home right now.
100 plus.
That's the number.
Oh, okay.
$146,000 is what you need to actually afford a conventional U.S. home, like right now, a median home. That's insane.
Hold that thought real quick.
Yeah, what is the actual median household income? Is that what you're trying to look up?
Yeah. Yes.
Yeah.
Okay.
Nowhere near that.
If you do household or individual, household makes it 9.2%. So 9% of a household could buy a house.
Sure. I'm not really sure. Oh, I get what you're saying.
Of the household.
So you're saying only 9% of households in the U.S. can actually afford a home at this price.
Essentially,
or exceed this. Yeah, I completely get it. So that means 90% of Americans, if you don't already own a home, you technically can't afford it according to the basic kind of financial analyst or financial planner expectation of how much should go towards a housing payment.
Yeah.
It's a pretty scary number.
The household, that's, like if you're married and have another income. If you're single, that is going to be way lower. That's going to be incredibly low.
If you're single and you're making this, your OnlyFans is doing fantastic, okay? But yeah, man, it's just, another data point on how that, like, can this really be sustainable?
No.
You're seeing like so much of the inflation is being run by housing, and housing in itself is in an entirely world that doesn't seem grounded in like a reality. Yeah, I get there's a housing shortage. We can do a separate video looking at that. But I'm just saying, from a standpoint of people like, aspiring to be homeowners, like this is going to be really, kind of what's what I want to say, that dissuading or depressing. That's the word I'm looking for.
I know Canada's even worse. Canada is much worse. I'm trying to get a percent on the fly, but it's too difficult. But regardless,
Yeah.
that's disgusting. That's not sustainable at all. That's why we do some videos on TLT, and some people are saying you're making an assumption, which I am. That's true. That interest rates will go down. The reason why I think that is because, one, if interest rates stay at this number, it's going to cripple the American economy. Because when people say, well, look at the 90s, well, you were making significantly more to what things cost. Now it's significantly less. So you own interest, and you just put everyone under a bar that they cannot survive. And two, I think we're now at 12% of the total GDP of America was just spent on interest. So that's not good. It's a problem.
That's I mean, and also, like, don't forget, we have a 4-year election cycle, right? We're 2 years out from one. Do you think a party in power, when 90% of people can't afford a home, because of this number, based upon what you're looking at there, will stay in power?
No.
Like, there is very real incentive for them to fix this by lowering interest rates.
Yeah.
From a political perspective, which is why the Federal Reserve is independent, but still, like they can see the writing on the wall.
They're independent to an extent. They wouldn't be like, yeah, we should do this. This would be best, while simultaneously being like, this will cause the U.S. to default and we lose everything, by the way. But the dollar will be better. That doesn't make any sense. Doesn't make any sense.
Right. Well, let us know what you think about this wild number. I'd love to hear your thoughts in the comments down below.
All right, guys.